Hey everybody, it's Paul and Seth for Everything Money Show. We welcome you back into the show. We thank you for joining us as always, all over the world. Our dear patrons, we adore you. Paul, Ebix has been in the news and it's not good. I was an owner of Ebix stock for the past, 6, 7 months, 8 months. I bought it as a part of Joel Greenblatt's teachings, the little book to Be the Market. This was one of those undervalued, overperforming companies that was on the magic formula. I bought it in July of 2020 at around $21. And it reached a high of upwards of $53 of late. And it has since crashed in the last 48 hours, down over 50%.
Yeah, it's down to $25 right now.
Due to fraud. And Paul, I would say, the premise of the show, folks, is I'm that idiot sitting here asking a guy who knows a lot of the answers, asking him your questions. And Paul, you've brought up fraud in the past. You literally say, like, be careful because this could amount to fraud. And I sort of gloss over it. Yeah, right. Sure, Paul.
Who really has fraud? It doesn't happen very often. No, it happens a lot more frequently than people realize.
And that's what we're here to learn is today we want you to learn, by the end of this video, we want you to learn sort of the ins and outs of what happened with Ebix, where it's going, what options they have, and what fraud has done for this company. And right, Paul? How can you add to that? What else can they learn?
So first off,
go on.
Big exciting news. We had 1,000 patrons last week. How incredible was that?
Incredible. It's just incredible.
And the patrons in Discord were like rooting it on, like we're gonna get there, we're gonna get there. I mean, they were so excited to hit 1,000 patrons. Everybody in the Discord is gonna get access. We'll talk about it at the end of the video, but it was pretty exciting. So thanks to all the patrons out there, because I remember when you first came to me in October and said, let's do a Patreon, you're like, this person has 900 patrons. Can you imagine that? And my goal for the end of the year was to get to 1,000 patrons. It's now February 23rd, and we hit 1,000 patrons. So awesome. Secondly, so here are the things we want to discuss with Ebix. One, fraud in general and how it's more prevalent than people want to admit and realize. Two, how Seth sold the Ebix stock yesterday.
I did. So I would
against my wishes.
That's true. I would assume that Uncle Paul would have just discounted this as when fraud comes in, it would be a good bet.
You had a very valid, Paul. I'm assuming I sell this, right? And little did I know he already had sold it. And I go, no.
Like there wasn't so much of FOMO. I was like, I mean, couldn't this take a company almost down?
To zero, yes, it could.
Yeah.
So that's the second thing we want to discuss. And three, we want to discuss in general why it's important because of this lesson about diversification and value investing, okay? So let's start with the first one. I want to talk about Seth. Mm-hmm. Seth, I bought this book for Seth last year. I said, Seth, I'm going to buy you a book. Do you promise to read it? He goes, yes. I did not think Seth was going to read it. He read it very quickly.
That's true.
He read it very quickly. He loved it. In fact, his son, Gio, who I think is a financial savant, because the guy calls me yesterday and says, Paul, CCIV is crashing. Should we short it? This guy is 10 years old, guys. It's not the fact that he's right or wrong, but the fact that at 10 years old, he said to me, should we short this? I didn't know what shorting was until college.
Yes, he's a good kid.
And most people don't even know what shorting is right now. Yeah. If I went to the average financial planner and said, to explain shorting to me, they'd be like, well, anyways.
Go on.
So when he bought this book, it's a book about systems, essentially. You're picking the highest return on assets and the highest earnings yield, which is basically the reverse of the PE. You want the lowest PE. That's I do recommend the book. It's wonderful, it's great. Joel Greenblatt's fun to read. How quickly did you read that book?
Well, I don't read that fast, but 3-4 days, yeah.
Yeah, and you probably had other things to do, right?
Yeah, sure.
So the one thing I believe in is not deviating from a system. I like momentum investing. I like systems. Even value investing isn't systematic. That's the hard part for me about value investing is it's a lot of subjectivity. I like systems. Greenblatt has a system. I believe you ride or die with the system.
Yeah.
He bought 30 stocks. Each one was 3.33% of your portfolio. If one falls to zero, it's only 3%. You were up 60% of the year.
Yes.
Beating the market by over 30%. To me, you stick with the system. Because now you went in and found another stock. So now you entered your own personal belief of saying, which stocks, Paul likes H&R Block, let me buy that one, correct?
Yes. After analysis, and it's still on the formula, yes.
Great, but I still believe in sticking with it. Because there was a company recently, I won't get the name of it, last year that I had options on. They were accused of fraud. They went from 90 to 70. They're at 180 right now because it turns out that they fixed the problem. They got through it. They did have fraud in there, but they fixed it and got through it. Fraud can lead to going to zero, absolutely. But it can also lead to a rogue worker who was doing something wrong and they fixed it, they got rid of the person. I don't know the entire situation with Ebix, but I prefer to stick with the system, ride or die with the system. Don't deviate. Don't let your emotions get in the way. Seth let his emotions get in the way. He goes in there, hits sell, texts me, I'm supposed to sell this, right? It's fraud. No. Oh, here's this like, by the way, I'm sure you're gonna do fine. But the whole point, I like to stick to a system because the second you allow yourself to deviate once from the system, you've opened the Pandora's box of all your other emotional reasons to get rid of the thing. Is fraud a big deal? Absolutely. Is fraud bad? Absolutely. Could Ebix go to zero? Absolutely. Leads to my second point.
Go on.
Diversification. This is why we pick 30 or 40 stocks. You know, really, really brilliant men like Warren Buffett don't believe in diversification for himself, but he believes in it for everybody else. When you're following the system, get diversified. Don't put all your eggs in one basket. That's why we diversify, guys. Because, you know, we're reading right now, and we're gonna talk about this video later. CCIV, Tesla, all these, you had Tesla and Amazon as like 40% of your portfolio at one point.
That's
and
correct.
Bitcoin was like, it was like a total of like 50% of your portfolio. And my comment was, Seth, if any of you have the three most overvalued things I can think of, and half your money's in it, we got a problem here.
Yep.
Now, if he'd stuck with it, he'd have way more money right now. But the point I'm trying to make is, we believe in diversification because you never know what's gonna happen. Fraud is one of the hardest things for the average investor to figure out. I consider myself a good investor. It's very difficult for me to figure out. I read a whole book on financial shenanigans and figuring it out. And even that one, there's no guarantee to figure it out. I look for high-level things. I don't remember the Ebix video we did. I don't remember if it ever struck me and saying maybe there's fraud here. I don't think so, but the point is, this is why we diversify. This is why we do value investing. So in our Discord chat, the highest level gets access to me all the time. And the guys are always saying to me, Paul, what do you think this company's worth? Yesterday, somebody asked me about Cisco. I said X. They're like, wait, but before you said Y, I go, no. There's a difference between what I think it's worth and what I'm willing to pay for it. Because in value investing, the main key is to pay less. Why? It's called margin of safety. Why? Because things like this will happen. You will be wrong. But the goal is that when you're wrong, you still do okay or don't lose as much money. That's the whole point of value investing. When your entire investment criteria is what's going up and what's going down fastest, you have no fundamentals attached to it. You're just on every single time you buy, you don't know why you're buying. Every time you pay for something, you don't know where it's gonna go. And if it goes lower, is it worth it to you? Because all you bought on was it was going up. With value investing, I'm evaluating a business. And I'm saying this business is worth X. If I buy it for 60% of X, I have 40% of area to go. Even if it drops 40%, I still think I'm okay. And that's the same thing here with Ebix. This is why we're doing this. You bought Ebix at 21 because of the system. It went to 53. It's up to 35, you sold immediately. Now it's down to 25. So yesterday's decision looks pretty smart, and you went and bought some H&R Block.
Yeah.
But again, going back to it, it's the systems we talk about. Does that make sense, Seth?
It does. I would figure I would figure that the system might break down with something as catastrophic as this.
Now, how catastrophic was what is the actual fraud claim? And remember, guys, this is why we do this show, because I want you guys to see my exact thought process. I do as little prep as possible, except for high-level points, because I want you guys to hear me say, well, what's about this? What about this? If I already know all the questions, I've already answered them, you're not going to hear my thought process.
So the accounting firm RSM, who is representing this company and running an audit, apparently Ebix is not very helpful in describing some unusual transactions related to the company's gift card business in India. And
what percentage of the business does that make up? Why is there a gift card business for an insurance software business?
RSM also disagreed with Ebix about the classification of $30 million, which the company says it placed into a trust. So, I think
$30 million of what? Revenue or cash?
It's not very clear. Ebix has said they intend to move as quickly as possible to replace the accounting firm and complete its 2020 financial audit.
Okay, so their market cap right now, after falling in half, is $930 million. So we're worried about $30 million of unexplained money. Wipe that away. Their current balance sheet, if you look at our 8 Pillars website, which by the way is right up here, and if you're a Patreon, you get this for free when it comes out April 15th. We're beta testing it right now. But you get all this financial data and the 8 Pillars for free. And by the way, look at the 8 Pillars here, Seth, if you remember. this is all based on the last 4 quarters. It's the only thing it doesn't have a check for is free cash flow growth. So that's pretty incredible. So anyways, right now the balance sheet has $112 million. And remember, the other thing is, I always say about cash flow. I like cash flow because it's easy to manipulate that net income number. Cash flow can still be manipulated. Cash can still be manipulated. It's just a lot harder to do that. So if they're right about the $30 million being unexplained, is it they're saying it's revenue and they're claiming it's not revenue? Is that what the question is?
Yeah, I don't know. They're saying in the fourth quarter of 2014 that Ebix had to pay a $1.4 million, had to pay 1.4 mil following an IRS audit from 2008 and 2012. So maybe perhaps they've been bad boys in the past, bad boys and gals. So yeah, I'm sure more will come out, but in the meantime, in your initial thoughts, you think a company like Ebix could overcome this?
I don't know. I haven't done enough research to understand what the actual issue is. When BP had its big oil spill years ago, I did some thorough analysis and I thought to myself, the highest number I'm hearing is $20 billion for a fine at that time. And they had like $60 billion in cash and it wiped out $150 billion or $80 billion off their $150 million market cap. And I was like, that seems like an overreaction. I don't know if that's the same case here. That it's just people fearful saying, let's drop this thing in half. And then all of a sudden you look at it going, but wait, if their real concern is 30 million bucks, they have total current assets here are 350 million. We're talking about less than 10% of their current assets. Doesn't seem like it's, I'm not saying this is accurate, but if, from a high level, if 30 million is the issue, now, somebody else would argue, which is a good argument, Paul, but if they're doing this, what else are they doing we don't know about?
I see.
That, especially for RSM pulling out. Like, that's kind of concerning. But either way, guys, the main point I want to put here is, one, in any type of investing, you're not going to be right 100% of the time. In fact, in value investing, if the companies do, if 40-50% of your investments do what you wanted them to do, you're going to do very, very well. In momentum trading, the momentum trading I like, turtle trading, they're like at 35% actually make money. 35% of your trades make money. But that's why we diversify. That's why we stick to a system. I know Seth left the stock and it looks like a smart move. I still like taking the system because someday you'll give yourself an out because you just said, well, I did it on Ebix, so what do I do to here? Like what I always say about Bitcoin. I go, if you hadn't sold Bitcoin, you'd have never sold Bitcoin. And your comment always is, but I did sell it. Exactly my point, because I like the structure and the discipline. And as bad as this sounds, I didn't even think to sell it. Like I wouldn't even have thought to sell it. I'd be like, okay, well that sucks, and let's see how it goes. To me, also, you bought it at 21 bucks. It's like you weren't hurting. Yes. I mean, if it falls in half, you essentially lost 3% of your portfolio, but you were up because it went up to probably 6% of your portfolio.
Yeah, I sold for a total gain of around like $2,000. I invested $5 and I now have around $7. So that's what I got back yesterday. And of course, my wife.
But it was up to 10.
Yeah, and my wife had
or
it
12
in her portfolio as well. So.
Yeah, so at the end of the day, your portfolio went down like 1.5%. That's why we diversify. That's why I like. And by the way, Joel Greenblatt's Little Black Book That Beats the Market.
Little book. That's your black book.
I always say the Little Black Book. Thinking about stuff. If you go to magicformulainvesting.com, you can sign up for it. You can do 50 stocks or 30 stocks. You get to pick which number you do. It's 30 or 50. So if you have 50 stocks, it's only going to be 2% of your portfolio. That's why we like diversification. That's why I believe in ETFs in the S&P 500 for your main investing. You're investing in 500 companies.
Yep.
So I don't blame you for selling. That's a fearful thing. When I heard the news, I was like, ooh, that's going to hurt. But at the same point, guys, that's the thing about fraud. You've got to factor in fraud is a potential. Look, for those of you who are too young to remember, WorldCom, Tyco, Global Crossing. In the last 20 years, how many major companies had major fraud?
I don't think normal people know.
That's the thing, because you don't experience. Oh my God, Enron was the biggest one. Jeez, oh Pete, that was the biggest one of all. I think it was like a $107 billion company went down to something like that. Fraud happens. That's why I like value investing. That's why I like diversification, because I will be wrong because I'm too lazy to go out there and open financial statements up and talk to the auditors and say, what's going on here? I'm not going to do that.
Yeah.
I'm not going to do that. I'm going to sit there, and there are different levels of value investors, and investors in general, right? And some people are very high level. You should be doing ETFs. That's it. You're a saver. You're just going to invest in ETFs. There are people like my friend Gary. Gary interviews ex-employees, suppliers, customers, competitors, everything. I'm here. To the average person, I seem like I'm here, but I'm actually right here, which means I'm reading financials, I'm reading 10Ks, I'm having people go out there and ask questions for me, I'm thinking about all that stuff, but that's the point. The lower and lower you get, the less diversification you need. But I still believe in diversification. Sorry, yeah, correct, that is correct. The lower and lower you get, the more, like Gary doesn't need to diversify if he doesn't want to. Why? Because Gary's talking to the mother's, the CEO's former third babysitter who worked for them, you know what I mean? I mean, Gary's going in depth, I'm not. But if you're up here investing in ETF, this is why you're happy about that. So diversification is still important. Value investing is still gonna work. It's just a matter of being patient and sticking to your guns. And if you're picking Ebix individually, saying, I want the stock, then I don't blame you for selling. You're like, listen, there's fraud here, it's uncertainty, I'm out because I don't know what it's gonna look like. I don't disagree with that at all.
If this style of investing resonates with you, whether you're interested in more of a disciplined value investing approach or momentum and day trading, you can enjoy either or both on our Patreon. The link is in the description below. If you sign up for our Patreon, the levels are filling, and they're filling fast, Paul. You get access to our Discord channel, a community of like-minded investors like you from all over the world. Paul, there's so many interesting people on our Discord chat that really are compelling. They have great stories, insight, and
they want to learn.
Yeah, they want to learn. Yeah,
and they want to learn with other people around them because Mo always talks about he didn't have anybody to talk to about investing. Are we gonna have the video at the end about this?
No, not on this one. No.
Okay, but either way, I do recommend the Patreon. It's access to us to get the software for free as long as you're a Patreon member.
That's right.
And the software is going to get better and better. It's not just going to be 8 pillars in financials. We're going to have momentum investing in there. We're going to have all these real estate calculator, real estate analysis, et cetera, and access to our own separate videos that you're not going to get access to on YouTube. So I recommend it. $13 a month is the current level. There's only 160 spots left. Please sign up because I guarantee you will regret not signing up when it's $13, $14, $15, $20, $30 a month because it will be $50 a month software at some point. But if you sign up at $13, you get it for $13 a month.
Well said, Paul. Thanks for joining us. That's our take on Ebix, fraud, and how to counteract it. Make sure you guys tickle the thumbs up, and we appreciate it. Talk to you guys soon. Love you. Bye.